Hello everyone, George DeSantis here with the look of the market for the week ending April 7, 2017. And as usual, we ought to take a look at the disclaimer first. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. So you must be aware of the risks and be willing to accept them in order to invest in the markets. Therefore, you should consult a licensed professional investment advisor for investment advice, since I'm not a licensed professional advisor. Let's begin by taking a look at the monthly chart of the S&P. So here's the monthly chart of the S&P 500 that we usually look at. First of all, we should notice that the Kalman filter, this yellow line, I labeled these here for you. The yellow line is a Kalman filter, and it's really a 4-period simple moving average. In this case, a 4-month average, since it's a monthly chart. So the Kalman filter is still above the instantaneous trend line, in fact, way above it. So as far as this measure here is concerned, what I refer to as a Mesa approach, the trend is up, of course. We also have a 9 EMA here. We can see that the Kalman filter is also above the 9 EMA. So this trend is still up. We can notice that we've only had a week's trading in this month of April, so there aren't that many bars here. In any event, because the whole body of this bar is engulfed by this, we have a bullish harami. In the middle of the chart, we have MACD. MACD has trended up from below the zero line, and it's still above zero, so the bulls are still in charge here. And at the bottom of the chart, Elder Force Index is trending down a bit. So what we can see here is that the trend is still very much it's an uptrend, okay? And the parabolic is still below the most recent bar. So all in all, it's still looking very strong uptrend on the monthly chart, the longer term chart. But of course, as my friend Alex would say, we really can't trade the monthly chart. So let's take a look at a weekly chart of the S&P. Here's a weekly chart of the S&P 500. And what we can see here is that last week we had a bullish piercing line after this drawdown here, this bearish bar, this red bearish bar. Last week, this was 2 weeks ago, last week we have a doji. So that's a bar, a candlestick that indicates that there is uncertainty concerning the direction of the market. Now, another thing we should note is that the Bollinger Bands are coming into a squeeze. They're narrowing as they did here, for example, and as they did over here. When the two Bollinger Bands come together like that, it's called a squeeze. And usually after the squeeze, we get a more dramatic move, a more significant move, either up or down. The squeeze doesn't indicate which direction the market is inclined to move next, but it does tell us we should get a more significant move as we did here, or in some case, and back here too. So now we have the parabolic above the most recent bar. The parabolic is indicating to us that there's a reversal of this uptrend. But in spite of that, we do have a bullish piercing line here, or candle, and the Bollinger Bands are coming to a squeeze. So now we don't know whether we're going to get another move up from here, riding the upper Bollinger Band, or whether we're going to go down from here. If we go down, the 2300 line here, and also the level of the instantaneous trend line, should act as a support level. It is a support level here. We hope that that would hold and doesn't get broken by the price moving below it. So we're a bit of a critical juncture here. My bet is that we're going up from here. There are a couple of other reasons why I say that. We seem to be holding at the 2350 level. So we have to determine if that's true. I'm still invested in stocks, so we'll see how true that is. In the middle of the chart here, we have percent R above the 80% line, which is quite bullish. We have the RSI 12 on a weekly chart is quite significant when it's above the 40% line. And we can see that it's been above the 40% line for quite a while now, and in fact, above 60%. MACD has shown some weakness, but it's just slightly, it's neutral. It's at 0.06. So that's neither here nor there. It's neutral. Neither bulls nor bears are in charge. So all in all, the trend here is still up because the Kalman filter, this yellow line, is still above the instantaneous trend line. And as I said earlier, if we get a pullback, we could look for the instantaneous trend line, which is at 2300 approximately, and this 2300 level here to hold as support. And if it breaks that, well, we have more pain. So we'll see how that develops. Let's take a look at the daily chart. So here's a daily chart of the S&P 500. First thing to note is that the Kalman filter is below the instantaneous trend line. The instantaneous trend line is in green. The Kalman filter is in yellow. The 9 EMA is in red. So you can see what I believe we are seeing here is a couple of things. First of all, there has been a downtrend on the daily chart. By definition, we're making low highs. This high, lower than this high. This high, lower than this high. So we are in a downtrend here. We've been in a downtrend. And we also have a lower low. Lower low than this. And a lower low here again. So we are in a downtrend. The question becomes, do we hold here? Do we go up from here? Or do we come back further down to the 2300 mark as we discussed earlier on the weekly chart? That is to be determined. It seems as though this market is really attempting to hold above 2350. We could see this line here. It keeps bouncing off that line. To be determined. The other thing to notice here is the Bollinger Bands are definitely in a squeeze. So I would be surprised if we don't get a more dramatic move in the next week or so. And it could be either up or down. Let's hope it's up if we hold stocks as I do. Now, the MACD is trending up from below the zero line, but it's still in negative territory, slightly below. So we'll hope to see that change in the coming week if we do get a ride of the Bollinger Band up. Now, Jerry Appel's sum of the rate of change indicator is still below the 4% line, so that's not very encouraging for the bulls at all. The percent R is below 50%. I like to see it above 50. Usually when it's below 50, we have a downtrend. As we discussed here, we have a downtrend. And the big question is, does this downtrend continue? Or do we hold and find support at 2350 and continue higher? To be determined. Well, let's go take a look at the NASDAQ weekly. Now here's a weekly chart of the NASDAQ composite. A very interesting chart, I believe. First of all, the Kalman filter, the yellow line, is above the instantaneous trend line, so the trend is up. Secondly, we should note that the Bollinger Bands are also showing us a squeeze here. They're narrowing, the space between them is narrowing. That's another thing to notice, and that just tells us that we can look for a more dramatic move, as I mentioned earlier on the other charts. Within the next week or two, we should see a more dramatic move up, more significant move. Last week, I mentioned that the parabolic was hit by this bullish bar, and we should expect it to go above the next week's bar. Well, it did go above it, but interestingly enough, it's hit again by this bar. So it didn't go all the way above here. It went here, just hitting the bar. The bar is hitting it. So we got a reversal here. We got another reversal here. Next week we hope to see, and we should see, this parabolic below the week's bar. So I think this market is intending to go higher. Secondly, we noticed last week that we had a bullish engulfing candle. This green bar totally engulfed this red body of the previous candle, and that's a bullish engulfing candle. So I'm anticipating a continuation of this uptrend after a consolidation period here. This consolidation period here for a few weeks, for 3 or 4, 5 or 6 weeks really, and we should go higher. Now in the middle of the chart we have a RSI 12, and on the weekly chart RSI 12, when it's above 40, it's usually in an uptrend, and we can see here that that's the case. MACD pulled back a bit during this consolidation, but it hasn't crossed below zero, and there is no divergence. So I believe we are setting up for another run up in the market, led by the Nasdaq. Let's take a look at the daily. On this daily chart of the Nasdaq Composite, we can see that the Kalman filter, the yellow line, is still above the instantaneous trend line, the blue line. It's very close to crossing below it, but it hasn't done so yet, if it intends to do that. Now we do have two dojis here, small bodied candles, indicating uncertainty. And so we don't know whether this thing is going to go up or down from here. Now we do have, you see the squeeze again, the squeeze of the Bollinger Bands, and also the parabolic is below the most recent bar. So the parabolic is telling us, at least on the daily chart of the Nasdaq, there is no signal here for a downtrend, no signal to reverse this uptrend that we've been in for some time and consolidating in. Now let's take a look below here. We find Jerry Appel's sum of the rate of change indicator is below the 4% line. So that's not very favorable for the bullish scenario. We like to see it above the 4% line. And MACD is still slightly below zero. So that again is kind of neutral. And Elder Force just barely crossed back above the zero line. So because, as I said earlier, I believe we are setting up for another run up, with the Bollinger Band squeezes and parabolic below the daily, the bars on the daily charts, etc. So let's take a look at something else before we end today. And here's a chart of the McClellan oscillator on the New York Stock Exchange. And as far as I'm concerned, it's still in bullish territory here above the 50 and the 200-day moving averages. And that's what I wanted to point out. So we'll take a look at, and here we have a chart of the percentage of stocks above their 200-day moving average of the S&P 100. So we can see that we're still looking pretty good here, because 85% of the stocks in the S&P 100 are above their 200-day moving average, the 50 and the 200. Next thing we look at, let's take a look. And here's a chart of the advanced decline line of the NYSE. And we can see that we are still having a significant amount of stocks advancing versus those that are declining. In other words, we have a nice looking chart here. So that's pretty bullish too. And here's a chart, a weekly chart of the S&P, showing the impulse bars, red, green, or blue. And right now at the right side of the screen, we can see that they're blue. They've been blue bars for some weeks now, which means that there is we are allowed to go either long or short. Now we could notice here that the 9 EMA, this green line, is above the 30 weighted moving average, and above the 50-day moving average. So the only way to look at this is to say that the trend is up on the weekly chart. In the bottom of the chart here, Williams percent R is still above the 20% line. And usually when that's the case, as you can see here, most of the time it's above 20%. This thing is trending up nicely. So we do have a bit of a consolidation. We could see it right here. Let's take a look at the daily. And you can see that consolidation here. On the other hand, you can see that we made low highs, and perhaps we will find some support here at the 2350 line, and that's really the important thing here. So all in all, I think this market is searching for support, and apparently if we break below 2300, well, I would think the first warning sign is if we break below 2350. We'll have more pain to come. Have a nice weekend, and we'll talk about this stuff again next week. Bye.